Can you record? Okay. All right. Go ahead and hit that record button. All right, guys. So today we're going to be talking about some moving averages, guys. Some of the stuff is real simple, real easy to do. There's nothing really complex about this one. This is also one of the strategies that Masato uses for the teacup method. All right. Now, let me ask a question. Quick question. How many new people we have on the line right now? I don't look like too many of you guys are new. Sarah, Deesh, Lanice, Bora, BA. So the how many of you guys know about the 4 and the 50 moving average?
I do.
You do? Okay. All right. So this is what we're gonna do. We're just gonna do a comprehensive review. We're gonna just step through how to actually set up the 4 and the 50 moving average. Then what we're gonna do is I'm gonna show you guys exactly how to get in on these trades when they cross, but also show you how to get back into the trade if you wind up getting out of the trade on the retracement or the bounce off of the 4 moving average. That sounds good? Hey, Corey, what's going on, man? I see you just jumped on. So, okay. So here we go. All right. So we're going to start with a fresh chart. All right. Start with a fresh chart. And we'll move that down there. So what you want to do first, you're going to go up here to your indicators list. You're going to go down to, let's see, I think it's trends. Yep. Your trend. You're going to start with a 50. And your 50 is going to be an exponential moving average. All right. You want to make sure your period is 50. You want to make sure your line is thick enough in order for you to see it. Your levels, you don't have to worry about that. And your visualization, you want to make sure it says on all time frames. All right. After that, you click OK. Now you'll see this blue line actually show up, and this is going to be your 50 moving average. Now, say if you wanted to change it to a different color, you just go here and change it to a different color. So say if I wanted to be salmon, you can change the color just like that, all right? But since I like the color blue, I'm going to change it back to the deep sky blue, all right? Now, what you want to do is you want to place another moving average in, and this one is going to be your 4 simple moving average. So you want to change your period to 4, change your MA method to simple, and then you're going to change your color. Now I'm going to change mine to white. That way I can see it on my black background very, very well. Now, same thing with the 50, your levels, you want to keep that completely free, and your visualization, you want to make sure that all time frames is clicked or checked, okay? You hit OK, and there you have it. Now, all you're doing with this particular strategy is waiting for the cross. The crossing of the 4 and the 50. That is all you're absolutely doing. Now, on every time that you get a crossing of the 4 and the 50, you're pretty much guaranteed a minimum of about 25 pips. This is absolutely simple, guys. A minimum of about 25 pips. If we were to get in here, once the crossing happened and once the the candlestick opened below the 50, if you go here, that's a total of what? About 86 pips. Beautiful. Crossing. One more crossing. Here it is. Your crossing happened. Candlestick closed above the 50. If you go up, that's a total of 160 pips. Here's another crossing. Right here. Very small crossing, but yet a crossing. Okay? From there on down, a total of 76 pips.
Hey,
It is
Dan,
another crossing. Mm-hmm.
should we be waiting a certain amount of pips after the cross to get in? Because I noticed for some of them, for certain pairs, it will go up and then, or it will touch that line and then it'll reverse itself. Like, so like it doesn't always stay on that trend. Like it'll cross and then it'll cross back on the, like it may be on the uptrend and then it'll
Mm-hmm.
cross and go right back down to the downtrend. And that's when it'll take that 25 plus pip dip as opposed to going on, I guess continuing on the uptrend. So should we wait a certain amount of pips after the cross to know that it's real? Or is it just like, once it crosses, we're good to get in?
What I like to do is I kind of like to wait until that second candle opens up. Once it opens up below, that 50 line, and I see that it's also below the 4, then I tend to get in, or say in the reverse. When it's going in the uptrend, you see how it crossed here, and then your second candle opened up, and it was above. The 4. That's when I would get in and just ride that bad boy up.
Okay, so just wait until like that next hour. If it's on like the hour chart, wait until like that next hour to make sure that it's still on that same trend.
Right. And just to make sure that the crossing is real, because I've had times where I got in anticipating the cross and that bad boy just kind of reversed on me. It never necessarily, hit. Let me see if I can find a spot when it did that. Just like right here.
Yeah.
You see how it got real close, like it was about to cross over. I got in at one time anticipating the cross, and it reversed on me and kept going up.
Yeah, that happened to me. It actually touched, and I'm anticipating for it to continue through and cross through, and it reversed and went all the way on the other side and went on the uptrend and continuing down. Okay.
Yeah. So this is my recommendation. I would recommend waiting until you see it crossing and the other candle opens up on the other side. That's just my recommendation.
Cool.
All right. So, all in all, guys.
Crossing on the far right over there. I like that.
This one here.
There. Yes.
This one gave me nightmares, man. This one absolutely gave me nightmares because I was up during this time. I was literally up during this time. This on the GBP USD. Let's see if I can pull that one out real quick. And so as you can see, I got all my teacups and everything set up. So this is the hour that I got up. I was up. I was pretty much ready to pull the trigger. I put in a sell. Next candle was a buy. It went up, pretty much hit my stop loss, and I was like, you know what? I'm done. I'm going to sleep. And then the very next candle, as you can see, it just went to hell. That right there, just from here on down, that's a 240, pretty much 245 pip drop. If I would have stayed in a little longer, that's over a 300 pip drop. I was a little upset with myself because I chose the right direction. I just chose the wrong time to actually have it sell. Because this candle here, this blue candle, that pretty much took me out. That was 22 pips. It pretty much took me out. Because I had a 20 pip stop loss in, and I was like, I'm pretty much going to sleep. And when I did not get to sell, because it was taking me out, I woke up to this whole this drop, man. This 300 pip drop, basically. I was really, really hurt in my feelings the whole 9 yards, man. I'm feeling like Drake right now. But this is what happened on Friday. And even if you would have gotten in on the crossing here, you know what I mean, and you just waited for the next candle to open, you still would have been able to get, let's see here, from there to there. That's about, let me see if I can get it. There we go. That's about 111, 112 pip drop. If you would have stayed in a little longer, that's 167. So I don't know what else to say. Just kind of be careful. I know right now Brexit is still having a lot of changes. This is the news. I don't know if you guys traded on Thursday. You see how the market just kind of moved up and down, up and down. Market moved here, then went up, dropped again, went back up, dropped again, went back. A lot of volatility in the market on Thursday. And this was that Friday. Oh, no, this was Wednesday. I'm sorry. This is Wednesday, this is Thursday, and here's Friday. Okay? So I don't know necessarily what's going to happen in the markets once the markets open back up at 5 o'clock. But I want you guys to be very, very careful. There's a possibility this bad boy may shoot up here, it may actually drop some more, dealing with the gaps. But what you want to make sure is we all know that if there is a gap in the market is always going to come back to where it closed out on Friday. So just be careful, because right here, okay, if you notice how here's a gap, market came up and got close to closing, but it really didn't close until 2 days later. It closed right here at the crossing, guys. Right here at the crossing. So what I want you guys to do is just kind of be careful when it comes down to doing your gap trading, but really pay attention to the crossing. This is probably one of the easiest strategies that's out there, along with the teacup strategy. And I use this in conjunction with the teacup strategy. So anytime that I see a crossing, all I do is just wait for the candle to open up on the other side and then jump in on that trade and just ride it up for about 20, 25 pips. And that's it. I don't get greedy with it. Go ahead.
Are you using the RSI at all with that, or no?
The RSI? Honestly, I don't even really use the RSI with this.
Okay.
I just look at it. I don't even think indicators are even necessary with this one.
Okay.
You know, if you're just basing it off of just the moving averages alone, there's no need for any other indicators with this.
Okay. Got it.
Yeah.
This week, I actually looked at the stochastic a little bit and the RSI, and that kind of helped me to see when it was going to top out. Like, like if it was on an uptrend and it like blasted up, and I rolled it up, you know, just to get my 10 pips and get out. And if I would look at the stochastic to see like, okay, is it overbought now? So it's probably going to start on its way down. So I mean that's kind of why I look at it. But in order, I mean, I don't use that as a confirmation to get in on that.
Right. Yeah. So if you use the stochastic to determine whether it's overbought or whether it's oversold, here's the thing with this particular strategy. Okay, if you see that your 8 or your 4 moving average is below your 50, okay? If the 4 is below the 50, all you're going to be doing down here is sells. All you're going to be doing is sells. You're not going to be doing any type of buy. If you choose to get in the buy, understand that you're choosing to get in against the trend, okay? So be careful when you're doing that, because market can change direction on you at any given time. So get in, get 10, and get out. All right? Get in, get 10, and get out. Because when it's underneath the 50, you have momentum going to the downside. When it's above the 50, you have momentum going towards the upside. So once again, you have to be careful going against the trend. All right. So get in, get 10, and be out. Now, if you want to know, say like, for instance, you got in on the crossing, you wind up getting your 20 pips or what have you, but you want to get back in, think as though that the market is continuing to go on to the downside. You see that the stochastic is definitely over the 85. You know you can get some more pippage out of the market. What you want to do is you want to wait for the candle to once again close underneath. Let me see if I can zoom in a little bit. You want to wait until, oh boy, what did I do? Okay. So what you want to do is you want to wait until your market price closes underneath your 4. When it closes underneath the 4 and it starts that new candle, you're pretty much guaranteed to get somewhere close to 10 to 15 pips. Real simple, real easy. Now, if you wanted to stay in a little longer, you could have done so. 61 pips. Here's your doji. You know it's going to be a reversal. You wait until it closes above the 4. Then you get it back in. And from there, there's a cool 18 pips, 16 to 18 pips. Here it is. It switched on you. Went back in the opposite direction. You wait until it closes underneath, starts the new candle. And there's 19 pips. You see how that goes, guys? Anybody got any questions with it?
Hey, Daniel, would you suggest that we still just, I know you said that on the cross is going to move on minimum of 25 pips. Would you still suggest we do the 10 and get out, or should we be trying to go for the full 25?
To be honest with you, with the crossing, it's pretty much safe to go with 20 pips, 20 and 25 pips. I like to just keep it simple. With the crossing, I will do 20 pips, but there are times where I would just do 10. You know what I'm saying? 10 to 15, and I'm pretty much done. I will do this in my live account and just, you know, I don't really like risking a lot in my live. You know, I know box strategy works. The teacup strategy really, really works. And this strategy works like to perfection. You know what I mean? So I will use those 3 strategies in my live account, but I would only do really like 10 pips in my live account. 10 pips per strategy. That's it. And then I will play all day long in my demo. I like to be really strategic in my my live account. Now, there are times when gold, you know, we get a gold, what do you call it? Gold trade that comes out from Luke, and that guy is like insane. Now, if you guys are not signed up with his what do you call it, his Telegram group, Luke Logmeyer, this guy is literally on fire. I think he's 29-2 for the last like 31 trades that he done posted. This guy is on fire, guys. The last trade that I did with him, this is that gold trade from last week. I don't know. Can you guys see this? Can you guys see that?
Yes.
This guy was absolutely on fire. He had us get in right about here. And I'm thinking to myself, is this thing really going to go up? Because I had been waiting for it to show me something. And the next thing you know, this bad boy just shot straight up. And it took me out right about here. Okay? And it kept going up. And I'm like, my God.
I was in that.
That day, you was in that?
Oh, yes. Luke, his calls are on point.
It is absolutely ridiculous. I sent him a message. I told him, listen, I don't know what type of weed you eating, but I need you to keep eating them because I need you to keep throwing these trades out. My account went to a whole nother level last week, guys. So if you're not on his or in his Telegram group, I would highly recommend that you get into a Telegram group. It's called the Gold Rush. Okay, I would highly recommend that you get in there because he's pretty on point. All right. Now,
Hey Daniel, doesn't that pay out just a little different?
what, gold itself?
Yeah.
Yeah, I mean, gold pays out a little different. I don't really fool with gold that much. The only time I really fool with gold is when Luke says get in. That's the only time that I really fool with gold. You know, like I told you, he's pretty much like, he's 28. Hold on, give me 1 second, because he just posted his record out there.
It was 28-2, but then he put in that one last trade, so it should be 29-2.
Okay, there it is. 29-2. I mean, he done called 29 successful trades and only 2 losses over the last, couple of months, I guess.
That was ever since Gold Cup launched. That was his.
And that launched,
September
about 2 months. Yeah. So, guys, if you are not connected, I would highly recommend that you get connected. Get connected, guys. Get connected. All right. So just as a quick overview, quick run back through on how to set these moving averages up, because this is basically one of the strategies that I'm using and I'm finding so much success with it, along with the teacup strategy. And I know a number of you guys have been successful with the teacup strategy. I know, Brandon, you already calling your own trades with the teacup strategy, man. Sarah, I know that you're doing miracles over there with this thing. So I want to make sure that everybody know, besides the teacup strategy, box strategy, and this one here, these are pretty much the only strategies that we really need in order to see success in the market. That's it. That is absolutely it, guys. So once again, you have your 4 simple moving average, okay? And you have your 50 exponential moving average. And all you're doing is waiting for the cross and that candle to open on the opposite side. Once you see it cross and that candle opens on the opposite side, you're safe to go 20 to 25 pips. That's absolutely it, guys.
Can I say one thing?
No, you can't say one thing. You can say many things, Sarah.
I forgot who that was asking about the 25 pips. If you don't feel comfortable anytime going like 25 pips at once, you can always twin trade and do 10 pips for each twin trade, and you can at least get 20 off that.
Yeah.
Okay. Yeah, that was me. I never really thought about doing it that way. The other thing I might ask this offline is, because I heard somebody else saying a strategy where you can do one for 10 and then do another one, but like add like a stop loss, like a higher take profit, but do like a stop loss on the second one. I tried that this week, but after I got in a profit, I put the trailing stop loss, and it cut my profit off because it bounced.
It took you out immediately.
Yeah, it bounced down and then hit that stop loss. I mean, I was still in profit. I already hit my 10, but then it went up to 12 pips and then went back down to 10 and then took me out. So
so you had a 2-pip stop loss on there. That's what it sounds like. So let me ask, because it sounds like you know how to put in the trailing stop loss. Okay. So did you choose one of these here?
Yeah, I did the 15 point.
You did the 15 point? Okay.
Yeah.
All right. So 15 point. This actually is a pip and a half.
Okay.
That pips you want the trailing stop loss to trail your profit, and then type that number in. Okay? So say if you wanted to go, what, 5 pips, 6 pips, you would type number 6 and then add a 0 to it.
Okay.
All right? Because here's the situation. They have converted everything over to points, all your pips over to points on this side here. So this equals to 5 pips, 4.5 pips, 4 pips, 3.5 pips, 30 pips, because you got to understand that every pip equals 10 points. That pipette is being counted here. Okay? So every 10 points equals 1 pip. So anytime that you want to go more than, say, 5 pips, because you got 50 points here, anytime you want to go more than five pips, you're going to use a custom, and you're going to type in how many pips you want first, and then add a 0. So for instance, I want to go 15 pips. I'm just going to add a 0 to the end of that. And now my trailing stop loss for that is 15 pips. That's it.
Okay.
Yeah. But that's the reason why your trade stopped out, is because it was like a pip. So you just got to be careful with that, man. That's it. But yeah, but we use trailing stop losses a lot. So anytime that you want to twin trade and you know that you can possibly get more out of that second trade, just put the trailing stop loss in and just let it, you know what I'm saying, rip and run, you know, because it would have been a beautiful thing to catch all of this right here. You know what I mean? With one, you put in one trade to capture your 10 in the second trade, you just put in a trailing stop loss and just let that bad boy run. If you'd have been able to catch this, that would have been beautiful, man. Absolutely beautiful.
Question.
Yes, ma'am.
So on that beautiful, hurtful drop that we missed.
I know.
So for the trailing stop loss on that, I know Dr. Spiller does 30. What do you do?
Mm-hmm. Normally, I would do somewhere between 15 to 20.
Okay.
It all depends. Sometimes I'll manually just move my stop loss up. Sometimes I would, you know, I just put in the trailing stop loss. Say I'm busy and I know I got a lot of stuff going on, I would do a 15 pip stop loss.
Okay.
Now, if I'm not busy, I'm not doing anything, and I'm just watching the charts, I'll manually move it.
Okay.
Yeah.
I'm sorry, I just missed that. You said if you're not looking at it, you set it to what?
If I'm not looking at it, I will put in like a 15 pip stop loss, between 10 to 15 pips.
Okay.
Yeah. But if I am looking at it, I'm just manually moving it. And all you got to do, say you get in a trade, right? And you want to move your stop loss along with the market. Now, say we missed this beautiful trade here, right? Now, if I had let me see if I can pull up my horizontal. Here we go. So I'm in this trade. The bad boy drops, right? So what I'm going to do is start this new candle. I'm going to drag my stop loss to the top. Hold on. To the top of that candle. You see how it is? That way, if market moves back, you know what I mean, I'm still capturing some profit. Now, I'm not going to be able to pull that. All right. Market continues to go down, right? What I'm now doing is, it started the new candle. I'm moving my stop loss to the base of that candle where it opened. Now, if you have a long candle like this here, then what I'm going to do is I'm going to move it really to the middle of that candle. All right. It starts this candle, then it starts the next one. I'm going to move my candle my stop loss to the middle of that long candle, and just let market continue doing what it does. Now, as you see, it reversed and came back, and then boom, it dropped again. So what I would have done is move my stop loss right here to the top of that candle. Market dropped again, reopened. I would have moved my stop loss again to the base of that candle, or maybe even in the middle because it's a long candle. And as you can see, once the market opened again, it took me out. So what I would have captured is from here to here. That's over 230 pips. Now that's only if I am not able to really look at the charts. I mean, if I'm not, if I can't look at the charts, that's the only time I'm going to be using a moving stop loss and manually moving it. If I can't look at the chart, I'm putting in a trailing stop loss, and it's going to be between 15 and 20 pips that I'm going to be using all day, every day.
Because that should handle the pullbacks.
Yep. That will handle the pullbacks every time.
Hey, Daniel, how many minutes was that move on that one? How many minutes did it take
Which one?
to complete that move?
For what, this move here?
That one, that long one, right? Yeah.
This one? Just this one, or
Yes.
you talking about all three of these
I
candles?
mean, the entire, right. Yeah, the entire movement at the end, from the top to the bottom.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that's about 12 hours. From this movement here to this movement here, that was about 12 hours.
Okay.
Yeah. But this right here was just 3 hours alone. Like I said, this is 2 o'clock if I'm not mistaken. So it's like 1, 2, 5, 6, 7, 8, 9, 10, 11. No, this is 1. I'm sorry. So 1 and then 2. 2 o'clock, 3 o'clock, it dropped. Yeah, I'm still upset about that. But then again, it's not like it's going to be the last time it's going to drop like this, because, you know, they're still trying to figure out what they want to do over in Europe and London with the whole Brexit situation. So, guys, definitely be on the lookout for another drop. That's all I'm going to say. Be on the lookout for another drop. All right. And that's pretty much I have for you guys for today.
I had
That's pretty much all go ahead.
Can you quickly remind me how to do the lines where the closing, your white lines for each day for 5 o'clock?
Oh, okay. So these are the period separators.
Right.
Right here. Okay. So what you're going to do is you're just going to go over to your properties, right click on your desktop, go down to properties, or hit your F8 button. And then you're going to go to comment, the comment tab. And right here, where it says show period separators, you just want to make sure that's checked. And hit OK. That's it. That's absolutely it.
Okay. Thank you.
All right. No problem. No problem. You guys got any other questions? If not, we can shut this down early today. We can get back to the game. Huh?
I have one question. Maybe I missed it.
What's up?
You typically do this strategy on the hour chart, correct?
You can do it on the hour chart. You can do it on the 4-hour chart. You can do it on the daily. It don't matter. Now, I would recommend not doing it anything below an hour. But you can do the strategy pretty much on the hour and above, any one of them.
Awesome. Thank you.
Oh, no problem. No problem at all. Anybody else? Anybody else?
On average, for the 1 hour, is that set? I mean, once it crosses, is that that usually take profit within that day or within a couple hours? Like,
Mm-hmm. Yeah, normally take profit within that day.
Okay, so this is more like a day strategy and not really like a swing or position.
Yeah, this is more of a day strategy. If you wanted to do a swing strategy, you can do the swing strategy off of a hour chart, but what you're gonna want to do is you're gonna want to zoom out to kind of see, you know what I mean, where things are. Because right here, that's a nice little trend. You know what I'm saying? Once it actually hits the top and then you see it starting to dropping, that's another trend. But a lot of times, like I said, we kind of want to wait until it crosses to kind of get in. It's really simple. Now, if you move it up to, say, your 4-hour chart, you can see it a little bit more. You know what I mean? And you can even catch more pips, you know what I'm saying, with that. But even if you throw it up into the daily, you know what I mean, the daily will show you more of a heavier trend or a movement. So getting in across here and then just riding it up until it crosses again is kind of what you really want to do when it's hourly. But this actually causes you to be more patient because you're going to be in these trades for weeks. Okay, now you got to remember on the day chart, every one of these candles equals a day. Now, when you're looking at it, you got to understand inside these period separators, okay, this is a month. This is a month. All right, a month. Every one of these candles equal the days of a month. Every trading day of a month. All right. So if you're going to be in on the day chart and you're going to trade off of the day chart at the crossing, understand it's going to take a little while for you to actually see, you know, the overall progress of things. That's why we kind of trade off of the hour chart, because you can see quicker results. Okay. That's typically it, guys. That is absolutely it. So you guys have any pairs that you want to kind of review, look at before the markets open up?